Okay, welcome to the Dr. Nia Desmia show. I would have everybody here. It's an exciting day again, and this is where I share resources, where I actually give resources or share information to help SMEs thrive, small and medium-sized enterprises. Now, if you've been part of this for some time. Thank you for being here. If not, welcome to the program. And of course, very short and always giving very good points. Of course, this is for informative and educative purposes only. Please work with a professional. And if you do not have a professional that is working with you, please reach out to yours truly. That's the website. Navigate to my CPA firm website and set up a consultation. All right. So today, another very interesting topic. Actually, I'm excited. This is the first day of October, and you know what? We're entering, or we've entered the last quarter of the of 2024. Now, when we when we're looking when we I mean when as we're looking at this last quarter, of course, we're very grateful that we're alive till today, and that's not don't take that for granted. But you know what I'm looking at is what the holiday season is just down the road, right around the corner, right? And so I'm just going to talk a little bit about expenses, how to maximize that expense, and of course compliance issues, of course. And what am I talking about? Holiday expenses, right? Okay. Now, I know that this is the time that we're thinking of, oh, we're going to appreciate um, customers, we're going to appreciate clients. Very good. It's very good. I mean, I love being appreciated. I'm sure many people love being appreciated. And so that's awesome. But, we want to see if we can get a tax benefit. Of course, I'm not saying that you cannot appreciate your clients if you do not get a tax benefit. That's not what I'm saying. But what about if you have a double whammy, right? You appreciate your client or your customer, and you also get a tax deduction. Wouldn't that be amazing? All right. So how do you do that? Now, it is very important to note. I know you're going to be so shocked if you don't already know this. IRS has a limit, for 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 gifts. Now, I get it. I get why they should have a limit, but really, the limit is really, really very, very small, right? And so it's yeah. Those that know and they have heard of that, it's been $25 over a long period of time, right? But again, things can change. But as of today, the limit is $25, meaning that you cannot give a gift, a business gift beyond $25, right? The value has to be $25, right? So I mean, if you give somebody a gift of 200, 300, then let's say you give somebody a gift of $200, right? What $200? The only amount you can deduct from that receipt is $25. The $175 is not deductible. Okay. So I wanted to make sure we know that, right? So you can give your clients a gift of whatever amount, but what is deductible is just the $25 gift value, all right? Regardless of how much you want to give that client, all right? So is it important for you or to remember that, right? Note that. Now, you might say, what about giving my staff? Because of course we're talking about appreciation, right? I even feel that you should appreciate your staff always, people working for you, right? Always. And now I want to stress it here. We're talking about your staff, not contractors, because you don't want to mix that up and start treating your contractors as staff, right? Yes, that would be nice of you, but at the end of the day, you want to protect your business, right? Because the contractor is a contractor. Somebody, I mean, the contractor might just fall into someone you have a direct relationship, business relationship with, that likely fall under the $25. But again, we have to analyze that. But remember, it's not your staff. You don't treat the contractor as your staff, because it will come back to bite you. I know I've gone and I've spoken about independent contractors and employees and how to classify and what you need to do. Make sure you're paying attention and don't mix things up, because at the end of the day, your business will get in trouble for actually treating a contractor as an employee. So you don't want that to happen. All right. So let's go back to the employee, your staff. Okay, you might say, okay, that's for giving customers and all those, giving the customer some gifts. So what about staff? Well, you can actually there's something called de minimis. Oh, well, I don't want to really go into to be too technical, but you can actually give your staff, gifts. But again, when we look at the gifts, we have to understand what it is. If you give your staff a cash gift, right, that is taxable to the staff. Okay. So again, you want to really analyze that to really check what you should do, right? So that your staff will not actually have a higher tax implication for you giving that staff the gift, because you want to really make the staff happy, right? And so, but if you do it in such a way that at the end of the day, it actually adds to their taxes, then that wasn't, of course, that wasn't your goal. But again, there's a way you can structure it, but you can actually give, gifts to your staff, right? Again, depending on what it is, right? Or how you structure it. All right. The goal is compliance, right? As you're trying to be a wonderful boss, compliance, right? Then another thing you can think of, which is awesome, and I know a lot of us love this, is holiday parties. I mean, whatever you want to do, Thanksgiving, Christmas, whatever, how you want to structure it. There's a way you can structure a Christmas holiday party where it can be deductible. Like, I mean, fully deduct. It depends on how you structure it. Of course, we have the 50% deductibility. We have that, but there's a way you can structure it. Of course, this is really looking at the tax law, tax regulations. Of course, as I always state here, I'm not an attorney, but my background allows me to understand tax law, understands tax regulations, and also understands the structure of how or of actually understanding how to structure certain things so that you can actually be compliant, because you don't want to open your company to audits, and then of course penalty and interest. All right. So yes, the holiday season is just really coming up very quickly, and this is the time that you can plan and see. I know that there are so many promotions going on with that, with gifting and things like, yeah, gifting. Is you can actually get something that is within a good price range, so that and remember, so that you can actually do more for your, I mean, give a more valuable gift to your client within that amount. Now, remember, is per client. All right. Don't, I mean, if let's say a dad and a daughter, they are both your clients, then you can give the dad and the daughter, or maybe the husband and wife. That's maybe, I believe it's, yeah, I have to double check that, but the caveat is that spouse, but I want to make sure. But anyway, if you have an issue with that, let contact me. But again, it's per client. All right. So it's very important for you to know that the goal is compliance and making sure that you get the benefit, right? Even as you're, giving your gifts, having a party, and giving your gifts to your, or having um, um, you know, giving okay gifts to even your staff, right? There's nothing wrong with that. But again, structuring is really the big thing. Structuring, and of course, structuring not to evade taxes. Really, remember, structuring in such a way that, okay, that you can make sure that you're avoiding, not evading. Of course, evading, we know what is a criminal offense. We're not doing criminal here, doing anything illegal here. We want to make sure that we'll focus on tax avoidance, right? So, get into the holiday cheer. Make sure, yeah, you're preparing for the end of the year. Make sure you're maximizing that deduction, right? You want to be able to, even if you do a holiday party, you can actually say, you know what, I'm doing dinner, and now I want to stress, I want to add something, right? Now, though, if you're trying to take your staff and say, okay, this is you want to do maybe an outing for your staff, and you take them, maybe you register them to maybe tell them that let's go to a golf club and register for the month or something like that. That is not allowed. That is not, well, it's allowed, but it's not deductible. Let me not say that. Of course, it's allowed. You can do, I mean, I know people that actually take their staff, they travel, right? Now, to travel, right? It just depends. If it's traveling for an event that it's beneficial to the company. Let's say let me give you a very good example. Let's say you're a team, and you want to know more on want to understand more on maybe marketing what you're selling, and maybe they send you have a course or conference in Florida, right? There's nothing wrong with taking your team there and having fun in Florida, right? But if you decide to go to any of the parks, resort parks, and anything, I mean, if you're staying there to go for the event, that's fine. But if you're taking, I mean, going to some of these events and having team events, you go there, maybe Disney, Universal, just go there for fun, and you pay for that. That is not deductible. That is not. But the cost of the hotel, because you're there in Florida for that conference, for that period of the conference, not before or after, right? For that period of the conference, that is deductible. So you have to understand what it is. So I'm not saying that if you travel for an event that's not deductible. No, it just depends, right? If it's something that you need to do related to the business, yes, it is. But if you're doing it for a holiday, and people do that, I want to take my team for a trip. There's nothing wrong with that. But remember that just for fun, vacation, carrying your trip, your team there on vacation, and just getting a deduction for that. What is that? It's not a business. I mean, it's not business related, right? So make sure and make sure that that you understand that it's not business related, and you don't deduct it. It's very important because I mean, if IRS audits you, and you find out that you traveled and there's no reason, it's not like you went for a conference or a course or something like that, then there's an issue, all right? There's an issue. But again, and this is just any broad information. Remember, this for informative, educative purposes only. We wanted us to dig in to look at, okay, how do we plan this very well, such that at the end of the day, it's tax avoidance, not tax evasion. Remember, compliance is the key. You don't want to get in trouble with the government, right? Of course, you want to maximize your deductions at banks and reduce your taxes or tax liability, but you do not want to get audited and then end up paying penalties and interest and paying that tax also, right? So you don't want to do that. All right. So thanks for being here. Of course, if you need me to analyze or go deeper, please don't hesitate to reach out, right? And of course, remember, to thrive as a business, you have to be intentional, right? Thanks for being here. See you next time. Bye for now.